Apple CEO Tim Cook making a surprise visit to China yesterday, greeting gamers as multiple reports show that iPhone sales are sliding in the country. Now, Counterpoint Research data reported that sales of the iPhone 15 in China are down about 4.5% compared to the 14's performance during the same time period. Jeffrey is also offering an even bleaker outlook. We have analysts estimating that sales were down by an even steeper double-digit percentage, with Huawei outselling Apple on phone sales. Now, we're joined by Nabila Popal. She's IDC's Worldwide Tracker Team Research Director. Nabila, it's good to have you here. So we got these reports out showing that iPhone 15 sales are not doing well in China. Is that consistent with the data that you're seeing on your platform?
So, I think it's really important to make sure we look at things in context, right? So I understand there's been multiple stories and reports about how Huawei's overtaken Apple now and it's number one. But I think that's just looking at a snapshot of probably a week or two, right? I think even the Counterpoint data says it's the first 17 days. So we don't analyze we don't collect or publish data based on a week-to-week sales. We more look at it, again, from a sell-in and a quarterly perspective. And on the long-term view, and we are not expecting, even for the quarter, for this past Q3, Huawei to enter the top 5 in China. So sure, we know that there was a lot of excitement, a lot of nationalism, and consumers, jumping in to buy the Huawei, latest Mate series with the new 5G chip. But we don't expect it for the quarter to result in Huawei overtaking Apple by any means. In fact, as I said, it's not even going to be in the top 5 for the quarter.
You mentioned the Mate. Does that point to success? And, I have to say it, with foldable phones, because this is one area that has garnered a lot of attention, either for better or for worse. But are foldable phones actually seeing more success than perhaps we even anticipated?
Foldable phones have gained, and Huawei actually was always a pioneer in that field, even before, I believe, Samsung released the first foldable, right? So they do make excellent devices, and the foldable segment themselves have gained a lot of traction. But unfortunately, Huawei is really right now not really shipping much outside of China. So for the the momentum of the foldable segment, which it is growing at double digits, even this year, where the overall smartphone market will decline by about 6-7%, we are expecting to see foldables grow by 50%, right? But again, that's coming from a small base. But unfortunately, Huawei is not going to benefit as much from that because it's only looking at its phones in China.
Nabila, when it comes to the perception of Apple in China, how much of a headwind that could potentially be given the escalating chip wars that's going on, the geopolitical tension between the two companies? When it comes to what that means looking historically at sales, how much of an impact does it typically have?
So to understand how much Huawei will impact Apple, and I know there's been so many stories and data or conjectures about Apple's performance and how it could potentially be hit, whether it's from the government ban or really this resurgence of Huawei. And we've seen Apple grow, whether you look at their own proportion of their own shipments from being 16% back in 2009 coming from China to now almost a quarter of the shipments coming from China. Or within China themselves, Apple's growth trajectory. So 2019, I'm looking at a longer time frame just to show the trajectory of Apple's growth. They grew from about 9% share in 2019 to now almost 16% share, and that's in 23. But now all the talk is this government ban and Huawei's resurgence. How will Apple suddenly flip flop again? And from our analysis and my own personal conjecture is that we don't think that it's going to be as quick of a flip-flop, even if Huawei devices, and again, as it's shown, in the weekly data that we've been reading about or talking about, that Huawei's done really well and has a lot of interest from consumers. We don't think this is necessarily going to mean within 1 year there's a flip-flop of performance from Huawei and Apple. I think it'll take a lot of time for Huawei to gain back that lost share, especially, it used to be, if you look at if you zone in on just the premium segment within China, Huawei at its peak had about 58% share. So premium, talking about $800 plus devices, while Apple had about 35%. And now, unfortunately, and I'm talking about prior to this, as of Q2, Apple's share in the premium went up to 72%, and Huawei's went down to like just 15%. And so does this mean like next quarter or next year it's going to be Huawei against 70 and Apple at under 20? I don't think so. Apple as a brand has what we like to call yes, everyone understands the concept of brand loyalty, right? Yes, it's brand loyalty, but also brand stickiness. It's very hard, stickiness being like once you're there, it's very hard to pull out. You're kind of stuck to that brand. And the OS system in general. So, and Apple, has a great degree of that. So it's going to be very difficult for Huawei, even if they're successful, even if the performance of the long term of the phones does do well, to pull back and gain, that it might gain some share, but I don't think it'll be a flip flop, if that makes sense.
That degree of stickiness is certainly an effort that all of these companies have deployed, and perhaps none better than Android and Apple, of course, as we come back to it at the end of the day. But when we think about the pricing strategy, that all of them, especially in a consumer that is in the U.S. more pressured, and even as you think more internationally, where consumers might be thinking about their in-cost for a new device, and then where they look across some of the recurring expenses or even other device expenses that round out that ecosystem for themselves. Is there a massive pricing war that may be yet to re-ensue once again here?
I don't know if it's a pricing war. It's more really the race to get more and more premium share, right? So I don't think the brands will, despite the macroeconomic situation we've seen even in the last, I don't even know what to say, 1 year or 2 years since the pandemic, right? There's been so much turmoil, but still we've seen the premium segment of the market grow. Prior to the pandemic, premium was about 10% of the market, and now it's about 20% of the market. So really double in size in terms of share. And that's because, as you mentioned, I think you alluded to earlier, consumers are smartphones have become more important, a more integral part of our life. But on top of that, we're holding onto the devices longer. So as the life cycle or refresh rates of phones lengthen, and consumers, when they are going out to buy their device, they're choosing, okay, I'm going to keep my phone for four years or 5 years. And because of that, I really want to spend as much as I can and kind of spend more to get the best device possible. And that's what's reflected in data. And on top of that, when you combine that with, especially in the US and some of the other developed markets, we've seen from the carriers like $1,000 trade-in offers, right? And slightly less, but even from the vendor sites themselves, those trade-in offers eventually make the bottom line or out-of-pocket cost for the consumer zero. So if I take in my 4-year-old device, give it and get $1,000 off for it, ultimately I'm going to be paying nothing for my new $1,000 device, or just a few $100 for a $1,300 device. And then on top of that, when you roll the extra $300 or $400 over the 36 months of financing that's available, and that's not just in the US, but also in emerging markets, retailers are offering free financing, interest-free financing, specifically for phones. If you want to buy a refrigerator, you're not going to get that finance. But if you want to buy a phone, we're going to offer you an interest-free 24-month, 36-month. And that really, you can imagine, $300, extra $300 spread over 36 months, not even $8 a month. So if I'm going to get a better phone, I'm, my monthly cost is just going to go up by $8. Go for it. Let's get the better device.
Yeah. Now forget holding on to a device for 4 years.
But actually, sorry to cut you, that's actually the average refresh cycle now. It's gone up from what it used to be like 2 to 3 years to 3 to 4 years. And in some markets, especially in China, I think the average rate now for iOS devices is 4 years.
Yeah. Well, I mean, look, if I can get a device to make it to 4 years with me, I mean, after 2 years, my devices are saying, give me back, brother, please, just let me go.
Right.
Nabila Popal, IDC's, exactly, IDC's Worldwide Tracker Team Research Director. Nabila, thank you so much for joining us here today. Appreciate it.
Thank you.